Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macros, technicals, and a touch of crystal ball gazing. Today is Thursday, June 12th, 2025. Today's episode, we have three pretty interesting headlines today. We had PPI coming out cool. I heard many people expecting the producer price index to come out higher than they expected. And instead it came out lower at only 0.1% month over month, both in the headline and in the core. The core being much lower than they expected, 0.3% at 0.1%. As I have said in previous shows more recently, the inflation seems to be unsticking, as last month's year-over-year core PPI was 2.9%, and now down to 2.7% compared to prices a year ago. So bonds definitely got a bit off of this news even before the bond auction, which was strong. Before we get there, just want to mention the continued claims hit another 4-year high today. This is very notable. If you've been following the show for the past several weeks, I have been noting how the continued claims, seasonally adjusted, seems to be gearing up to go even higher, and today was a spike to the upside. We have not seen continued claims this high since 2021. I think this should have gotten more of the headlines today, but instead there's all sorts of drama going on in politics. Boeing stock, for me, all of that is just noise in the way of what's important for us that want to understand what's going on with financial markets. The job market is absolutely falling apart here, in my estimation. We are now a hair below 2 million continued claims. And this is occurring at the same time as the Fed is still being restrictive here. The jobs market is falling apart, and the Fed isn't cutting. The 3-month, 10-year spread is at zero, and in my book, that means the Fed is still holding the economy down, trying to slow it down as it's clearly falling apart. This isn't going to end well. Moving on to the third headline, the 30-year Treasury bond auction was strong. While supposed experts like Ray Dalio say that we have a severe supply-demand problem when it comes to treasuries, the $22 billion 30-year Treasury bond auction went off today very strong. Just to show how strong it was, the 30-year Treasury bond yield had already opened on the day lower than yesterday, but the open was at 4.86%, and the lowest that people were able to pay for these Treasury bond yields had a yield of only 4.84%. This is screaming high demand. Everything about this report is strong. The bid to cover ratio being 2.43%, strong number. And most notably probably is the indirect bidder, got $14 billion of it, about 65%. The prices were bid all the way up to the point where the yield, the yield they got to was only 4.7%. But again, the main thing, the indirect bidder taking 65% of the auction, says that foreign demand specifically was very, very strong, and the primary dealer only having $2.5 billion of it. So while that recent 20-year bond auction that we had a little while ago seemed weaker, and people were wondering, what if Ray Dalio is right and nobody actually wants to buy the debt? No, the buyers are here and they're strong. So obviously this is good news for TLT, my favorite place to be. We'll take a look at that chart momentarily. Before we get their community topics, what moves, if any, did you make today? I sold the UVXY puts that I talked about buying. I bought them yesterday and sold them today. I was going to sell them today no matter what. I was expecting a lot more volatility today, considering that continued claims are now at a 4-year high. I think this is the most important news out there. All these other headlines talking about what's going on in California, what's going on in Iran, what's going on in India with the plane situation. There's so many crazy things going on in the world. It's almost like there's some entity out there pulling strings, not, to get too conspiracy-like, but this is the real news to me, is the continued claims were at a 4-year high. I was expecting more volatility. It didn't happen, but volatility did go up enough for me to actually make a very small profit on those puts that I sold. Anyway, again, what moves did you make today, if you made any? I'm curious. Please comment below. Coming up, as always, continuous tariff updates and federal budget updates. Thank you for watching, subscribing, commenting, and supporting. I'm something like 55 subscribers away from that 1,000 subscriber mark. Come on, guys. Help me get to that 1,000. It's so easy. You just put your mouse and you just click the little subscribe thing. No changes to the daily reminders macro views. Read my website or see my recent video on this to hear an explanation. And no changes to the crystal ball readings nor the Robschild portfolio other than short-term selling the UVXY puts. Onto the charts, starting with TLT, my favorite place to be. We now have broken this neckline here. I can make it a little thicker so we can see it a little bit better. Here is the left shoulder. Here is the head to the neckline here. And then here is the right shoulder breaking above it today with a solid green candle. At 1 p.m. when they released this information about the Treasury bond auction results, TLT got pretty strong, and it stayed strong, and we closed near the highs of the day. This is a very strong look for TLT. I am fully expecting at this point for TLT short term anyway to get to this head and shoulder, this inverse head and shoulders target, which will be, let's see where it is, around $90.50. Moving on to SPX, the S&P 500, we went up by 0.38%. Pattern-wise, I don't know what's going on here. Short term, all I see really is it's bullish. When things go up, they tend to keep going up with the momentum, but we are sort of coiling up here in this tight range, so I think we're due for at least a little bit of a pullback if we're going to continue higher. Bitcoin dropped by 2.35% today, which is pretty interesting, right, with stocks going up, bonds going up, gold going up. We'll get there soon. I wonder if this is sort of going to lead the stock market lower, as it's tended to operate this way. It tends to lead risk assets, including stocks. And yeah, this is starting to look like short term, just a little blow off top here. I'm not sure where we're going, but this very large inverse head and shoulders that we have on Bitcoin is still developing here and still may play out. A lot of people, including myself, do sort of see another leg up in Bitcoin, likely to the $130,000 area. And this is just chart patterns, but thought I should share. One thing that's been sort of bothering me lately are corporations purchasing Bitcoin, especially corporations that issue stock and they're buying Bitcoin. Now, I don't know about you, but if I want Bitcoin exposure, I either want to buy the Bitcoin myself, or maybe I want to own a miner that is producing and selling Bitcoin for a profit. But to simply buy Bitcoin because as a strategic part of like the reserves of your company, like in the place of cash, I think is just, it's unbelievably irresponsible. I mean, whether it plays out to your favor or not, it's very irresponsible. And now, you know, we don't just have MicroStrategy, but GameStop comes out today This is from CNBC. I'll read this little snippet from their website. They have plans to raise 1.75 billion dollars of convertible notes, offering to potentially fund its new Bitcoin purchase strategy. So they are selling debt to say, hey, don't worry, we're going to pay interest on that. Convertible means, you can switch it to own more of our company later, and we're going to take that money that you give us and we're going to buy Bitcoin with it. Are you joking me right now? Man. 2025. When the crypto market blows up, there are so many people that are going to get so hurt. The more that this goes on, the longer the music keeps playing, the worse the fallout's really going to be, in my very strong estimation. But remember, guys, I'm just a guy with a crystal ball. Many eyes are on the dollar, including Lynn Alden, including Ira Epstein, some other people that I watch and pay attention to, noting that it's the 97.83 level, that if we break to the downside, there's not a lot of support until maybe around 93. I'm hearing $92. So it is sitting on this line, and we're not breaking it yet, though. But if it does start to fall apart, then everybody and their neighbor is expecting the dollar to not have much support for a little ways. So something to keep an eye on. Dr. Copper with a PhD in economics. This was today's candle, the second to last one, going up 0.8% today. Still within this little line here, this little wedge. As much as I actually don't like charting at all, I don't like chart patterns, they play out. They end up playing out in certain ways that are expected. When you have a thing that's coiling up in a range like this, we're preparing for a breakout. And when you have a line like this, the breakout's usually to the downside. So just another thing to keep a real close eye on, in my estimation. Gold. Sorry for all the crazy lines. Let's get rid of this volume here. Gold's bullish. After breaking out of this channel here, closing higher and higher, this is like a perfect setup for a move higher. I'm hearing people say that we are headed up to the $3,600 level from here. So we'll see. Next up, I wanted to share an update on UNH, only because it is a part of my portfolio. I bought it around the 270. Oh, yeah, it was like 270 is when I bought it. So, wow, it didn't stay there for long. This is for me a Benjamin Graham opportunity, like very obvious opportunity. I will be selling at $333. We've been sort of tightening in this range, and we're breaking out to the upside. I fully expect us to easily get to this target, which is when I'm going to sell it. Just wanted to bring that up in case anybody else is on the ride with me and wants to know when I'm getting off. Last main thing of the day, the 10-year break-even inflation rate. From mid-April until mid-May, we were climbing higher and higher. I was kind of curious if we were going to take out this previous high in March, but we didn't. We started going down, and now we are very clearly accelerating to the downside here in the 10-year break-even inflation rate. Again, this is what the market is pricing the expectations of inflation to be over the next 10 years, now sitting at 2.25%. While we get closer and closer to this supposed, tariff 2.0 day, where tariffs are going to make everything expensive and inflation's going to go to the moon, the market that literally bets money on what the inflation rate's going to be is going the opposite direction. That just screams to me how much there is a slowdown coming. I'll go on record right now that I do think that the 10-year break-even inflation rate will get all the way back down to 2% itself. And if this cliff fall continues to the downside, and next week, by the time the FOMC meeting hits, and we're still clearly on a trajectory going straight down to the ground, you can bet your hat that the Fed will actually cut next week. And I think that will get a lot of people off guard, but that's all just like a crystal ball rating, you know. What do I know? I'm just a guy with a crystal ball. That's all for me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you next time at Robschild.